please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to a very special edition here on CNBC TV18. I'm your host, Ronojoy Banerjee. This is a company that has its genesis in Czech Republic, but if you ask an average Indian, most of them would be surprised because most Indians here would think that Bata is an Indian brand. That is the power of brand Bata, but it's a brand that is now in a state of rediscovering itself. To talk more about that, I'm delighted now to be joined by my guest, Mr. Thomas Archer Bata, the Chief Marketing Officer globally.
Great to be here.
Great to have you on our show. Thanks very much. So for most Indians, Bata is actually an Indian brand.
Yeah.
So that, many would say is remarkable. But at the same time, you're now trying to rediscover the brand. Why do you want to do it? Many would wonder, just leave it as it is.
Well, I think, for us, Bata in many ways is an Indian brand. At least it has an Indian soul because it's been here for so long. It's been part of the culture. Countless generations have grown up wearing school shoes, father, son, visiting the stores together. So, why do we want to change the image? It's because as, the world becomes more globalized, it's really necessary, for us to be on top of the trends.
Right.
And if you like it or not, the perception is that an international brand is a little bit more aspirational than a local brand.
Yeah.
So we don't want to lose our closest to market.
So has suddenly your biggest strength become your source of weakness? Your biggest strength was Bata, Indian brand, sense of familiarity. Is that now beginning to, has that now become your Achilles heel, and all puns intended here?
Yes, I think, to an extent, the tradition does help us.
Okay.
It means that, we are relevant, we're trusted. But it's hard to be cool when you're a traditional brand, right? So our challenge is to bring a little bit of coolness to our tradition and appeal to a younger generation.
Yeah, so your biggest challenge then, Thomas, would be the fact that, I have worn Bata, my parents may have worn Bata, but the challenge is, will my kids wear Bata? That's the big challenge that Bata is now grappling with.
Absolutely. It's how we get your kids, to come, 20-year-olds, 25-year-olds, and then, just the whole kind of transitional generation.
So right? How are you doing that?
So what are we doing? Well, first of all, we're starting off with product. We have to have the right products. So we've taken an approach whereby we actually really understand the consumers, understand what they're looking for, and then we bring those products as quickly as possible to market. So we introduced lots of new collections and our power brands, North Star brands, Bata brands, which are a little bit more relevant to a younger consumer. And second of all is cool, engaging marketing that they can actually see. What I always hear from Indian consumers is, oh, I haven't seen Bata marketing in years. So that's something we're trying to change now.
So because would you also look at the option then of, you're telling me that you're trying to reintroduce different kinds of brands. Would they always, would I find those brands always under the Bata showroom, or is there even a possibility for you, gauging the response some of the brands get, to actually spin them off as a separate brand identity and perhaps separate stores for them? Is that something that you're open to?
Absolutely, and it's actually something we're doing at the moment. Let's say, for example, Power. Power is a brand that we've completely rejuvenated over the last year and a half. Now we've signed up the vice captain of the Indian women's cricket team, Smriti Mandana, and she's basically helping us launch some of our more premium lines. So now we're bringing, much more colorful, technological lines to the brand, slightly higher price point, but extremely good value still. We opened our first Power store a few weeks ago here in Noida, and so we intend to spin that off, really create a strong athletic brand in its own right. And then we're looking at other brands like North Star, like Bubble Gummers, each catering to a slightly different segment.
Oh, that will be a complete overhauling of your branding strategy that you followed since, what, 1932?
That's correct.
My God, so it's a complete overhaul of the branding strategy. If you're telling me that each of these brands could potentially then have their own distribution network, then it's like completely changing the way you've done business.
It's a big change, but we believe that well, you have, let's say, the father company, Bata, overall, guaranteeing, that trust, that quality, that people have been used to. Each one of the brands has to take its own life at some point, and they have to build their own story. and their own association with the consumer.
So currently you're telling me it's only brand Power which has its own sort of distinct identity outside of the Bata retail.
Well, we've always had Hush Puppies.
Hush Puppies
has been probably the first one we did.
Yeah.
But in terms of appealing to the youth segment, Power is going to be, let's say, the first big play we're making.
And then how many more brands will sort of follow what you're doing with Power?
Well, we think, you know, the youth segment in general is interesting. So Bubble Gummers is a concept we're looking very seriously at.
Okay.
Bubble Gummers is this brand here, exactly. Okay. Because as consumers join the middle class, as they care more about, let's say, child health, safety, we think, you know, the kids premium market is going to grow exponentially. Okay. And I think we're already seeing signs of that.
Right, right. Because today, you know, even though the brand is so ubiquitous across the country, would you have, you know, because I was trying to dig up what your market share would be, and I'm also trying to figure out how do you compare Bata's market share, because you produce all kinds of shoes. But is there some number or something that you can share with me? Where does it stand right now?
Well, what we know is that we are definitely the largest footwear company in India. Unfortunately, market data is a little bit difficult to come by because you have still a strong informal sector, you know, formal sector. But if you look at us, we're, you know, twice the size of our closest competitor. Yeah. I think we still have huge potential if you look at the, let's say, brand recognition compared to the volume that we sell today. So I think, you know, all right, we're market leaders in the sports category. Actually, Power is the largest sports brand in India. It's not necessarily recognized as such. So that's something we'll be working on growing further.
So currently you're producing about between 55 and 60 million pairs of shoes.
Correct.
All right. So how do you see this, you know, the quarter that has just gone by, how do you see you finishing financial year 2017, 2018?
Yeah. Well, I think, you know, 2017 was a good year. You know, we had great bottom line growth, we had good top line growth. This year, our challenge is to accelerate top line growth. You know, I think, you know, last few years we've been delivering great profit, you know, exceeding expectations. This year, with all these new initiatives coming online, we'd be disappointed if we didn't get into the double digits, you know, turnover growth.
Double digits is what you're anticipating this year, because you know, earlier you've said that a $1 billion revenue is what you're targeting. You're still, you know, you have to double that from where you are, perhaps even more than that. So can you give us a timeline then? Finally, when do we see that happening? Yeah,
well, I think, you know, realistically, if we get, you know, we expect to get in the double digits this year and then maintain that. So at that rate, you know, we're looking at a 4 to 5 year time frame. I think, you know, when we look
4 or 5.
4 to 5 years, yeah. And you know, it depends a little bit on how quickly we can ramp up some of our initiatives. So we have initiatives like Power I was mentioning. We've identified the sports athletic market in India as a huge opportunity, relatively uncompetitive compared to other countries, especially in the segment that we're looking at, which is, let's say, the mass market, mid-price. So we think Power can play a huge role in accelerating our growth, as well as expansion to smaller cities. You know, another thing that we've identified is that there are over 450 cities in India with 100,000 people where we don't actually have a presence, right? So those are towns where we started to dabble a little bit and started to open usually franchise stores. The results have been very, very interesting. So that's something that we, you know, low-hanging fruit we see.
All right. So in the big cities, it's not, I mean, these are stores that Bata directly operates. Correct. But in the smaller cities, you're adopting a more franchise-led model.
Absolutely, yeah.
All right. You know, since you mentioned you want, you know, that you expect to end this financial year on a low double-digit kind of growth, and you'd be disappointed if you didn't. So far, what? I mean, so far, this, you know, in the first 3 quarters, your overall revenues have grown, I think, by about 6.5%, 7%. Yeah. So that means you're expecting a substantially good fourth quarter.
Yeah. No, we're expecting actually this quarter and the next quarter to be even better, because like I mentioned, many of our initiatives that were launched last year and announced this year are just coming into force now, right? Because there's a bit of a lag time. So products like the Red Label collection, which I'll show you later, we believe have huge potential in terms of revenue growth. Power the same, and we're going to be aggressively marketing, announcing some new collaborations, new brand ambassador actually in the next few days.
Okay, who would that be?
Kriti Senon. So we're working with her to you know, really launch this Red Label, appeals to a younger demographic.
All right. Then talk to me a little bit about this, about the store format, the Red Label format. I think you started this in Italy, and now you've come. So, tell me a little more about this. How is this different from what Bata is already doing here? So
this is a new format that was developed about 6 months ago in Italy, and the concept behind this format is to make, you know, the product king. right? We've incorporated red and white as the primary brand colors, so to give it a much more identity than our previous concepts. Fresh, new look, very modern, very easy to shop, where service becomes really the essential factor in the shopping experience. So product, service, and I think if you look at it, it's a very agreeable, very attractive, very different perhaps than what people were used to in the past.
Can you give us a sort of a roadmap over the next 2 to 3 years, or let's just say over the next 4 to 5 years, since you've said that's when you will hit $1 billion revenue? It will come on the back of how many more additional new stores?
Yeah, so at the moment we're opening about 80 to 100 stores a year. We're also remodeling a large number of stores in the new concepts. And we expect that to maintain or even increase, especially if we look at rolling out our franchising model. That will give us an opportunity to, accelerate the number of openings.
All right. So, but roughly 80 to 100 is what you've been doing, and that's roughly what we will see.
What we expect to continue with.
That will experience. What do you then, as you stand here today, what do you think are 2 or 3 of your key challenges?
Well, I think our number one challenge remains the same as it was. Appealing to a larger demographic and younger consumers. I think it's a transition that takes time. I don't think especially a shoe brand, equity is built over a very long period of time. It's not that impulsive, right? So people already have preconceptions of what they expect. So just to get those people surprised, get them to come one time. That's all we need. Come back one time, you'll be surprised by what you see, and then you're converted. So that's probably our number one. Our second challenge is how to incorporate technology into our business. Okay, I think we've been, if you look at perhaps the market in general, there's been a huge shift towards e-commerce, towards researching online, towards analytics in your purchase decisions, etc. This we're catching up. We have our Bata Club, where we have 18 million members already here in India, which are giving us feedback on a constant basis. We have our e-commerce shop, which is growing, but we're still not offering to the level that we want to offer a seamless omni-channel experience, and this is something that we're going to be delivering in the next little while.
So you actually preempted my question, because I wanted to ask you, how are you seeing this whole e-commerce revolution? Because your presence there is still negligible, many would be considering your size. So can you be more specific about your plans as far as e-commerce, omni-channels that you spoke to me about?
Well, I think first of all, we believe brick and mortar retail will always remain an essential part of our business model. And because people, if you like or not, we're social beings. We like to go out of our house. We like to go to a shop, right? However, what will change is that the research of what I want to buy will be predetermined. So we believe, people will be looking on their phones, they'll be sitting on their couch at home, choosing the shoes they want, and maybe they're not going to necessarily order it to their house. Perhaps they will, but they'll book it at least online. Come to the store, try it on, because sizing is still a big issue in footwear, and people, one of the reasons people are scared to order online. Come to the store, have the experience, which is quite pleasant, and then hopefully buy something else, which is another thing that we like.
Okay. So India is now your second largest market after Italy. Over there, of course, growth is stagnating. When one would assume it's just a matter of time before India then becomes your largest market.
Absolutely.
Can you give me a sense, what is internally, what do you by when do you expect India to be the numero uno for Bata?
We expect 2019, if we achieve our targets, which we fully expect to do, 2019 will be the year that India would become the number one business for us.
Currently it contributes for 26-27% to overall,
a little bit
in terms
less.
of volumes.
No, we're talking more like 15-16%.
15-16%. All right. So then when do you do you see India's share going up now, considering all these?
Yeah, I think it does, because I think especially if we're talking about reaching our $1 billion target, India, just with the mass of population, economic growth, India now is the fastest growing major economy in the world. It would only be natural that India should keep increasing its share.
All right. Talk to me a little bit about yourself, fourth generation in this one of the most storied business families. You started up as a store manager in Prague.
That's
so
right.
talk to me a little about your own journey.
So my own journey is I was actually educated in the UK. I went to high school there, university there, and then I worked briefly in Nike in a marketing role, which taught me a lot. I have to say, great school. And then I got convinced to join the family business. I'd always been somehow involved since a young age, because my father was the CEO and my grandfather before that. So my holidays were going to shoe factories, you know, so very envious of the other kids, I have to say. And so I started off in our flagship store, managing that store in Prague, which is a beautiful 7-story shoe paradise. I think probably the largest shoe store in the world, which was a great experience. So I interacted with customers from all over the world, really learned, you know, at the front line how retail works. Yeah. After a little while there, I was transferred to South America, to Chile, and I was the general manager in Chile for 3.5 years, expanding our business there, growing multiple retail concepts. So sort of like we're doing here, we opened there, you know, wine brand specialty stores, bubblegum specialty stores, in a strategy that worked extremely well. And after that, we actually had a new CEO who joined us 2 years ago, Mr. Alexis Nazard. Who is a very strong marketing, from a very strong marketing background, having worked at Heineken previously, and you know, he called me up and said, you know, come back to Europe. We need you to work with us as CMO. And for the last 2 years, I've been, you know, looking over that transformation, both from a products perspective and from a marketing perspective.
A great story. You know, coming back to India now, since you are investing a lot now, putting in a lot of money in these store expansion, can you give us a number in terms of the kind of investments Bata will be incurring over the next few years?
Yeah, you know, I can't give you specific numbers, but you know, generally we're looking to spend 4 to 5% of our turnover in you know, capex, so in investments. So you know, marketing we're spending between 2 and 2.5%, and that's also something that as we see our marketing campaigns work and deliver results, that we'd also potentially be looking to accelerate.
Is there any change in these numbers from, let's say, 3-4 years back?
I think, you know, the major change is what we're spending the money on. I think in the past we were spending it on projects which didn't necessarily have an immediate return or have an immediate link to improving our brand positioning, right? They were perhaps more infrastructure projects, things like that. Today our investment has gone much more into consumer-facing items. So product development, stores, marketing. And I think that's a pretty big shift.
All right. You know, because many of your investors would also be wondering, considering that you're putting in so much of money in investing, you know, will that hurt your profitability or hurt your operating margins overall? Because if you look at your margins, it was about 12.4% in FY15. So far this financial it's 13.8%. So it's shown some improvement. A, what do you attribute this to, this improvement? B, now with more focus on more premiumness, do we see, is there more headroom for growth, or is your expansion, you know, could that soften the margins?
No, I think the margin, first of all, it's increased because I think we've been more efficient in our business, controlled our costs. And second of all, we've managed to premiumize our collection somewhat. So obviously as we move up in price, that gives us a little bit more scope for gross margin. So I think that's, you know, what's happened so far. We are not going to grow turnover at the price of profit. Okay, so they will grow in lockstep. You know, turnover will grow and profit will grow. So our intention is to gradually increase our margin, but focus on turnover growth.
Okay, so both will grow in tandem, not one at the expense of the other.
That's right, and we're going to keep them very balanced.
Tell me, because every time I've seen, and over the last some years now, I've been seeing Bata focusing a lot also on its accessories. So currently, what, 6-7% you said?
About 7% of our turnover is what we call non-footwear. Okay,
so what's the plan on the accessory front? Because it's a sizable number then.
Yeah, no, it's a very big number. Handbags is in the very short terms our strategy. We think handbags is probably the segment where we have the most opportunity, especially as we gear ourselves more towards a female consumer base. You know, we think that it's the perfect thing to tie on with a shoe.
Okay, so can you give us, I mean, number in terms of potential of the accessories and its contribution to your top line?
I think, you know, we're looking eventually to be above 10%. You know, I think that would be the realistic expectation, because if I open up the 7%, it's actually, a big chunk of it is actually shoe care today. It's not really handbags. So the growth potential in handbags is very large. And if you look at some of our competitors in the footwear industry, you know, many of them are doing 10+% just on handbags.
In conclusion then, you know, any comment that you have on, you know, because when I asked you your, you know, some of the concerns, you spoke mostly about, you know, issues that are, you know, that are central to the footwear industry. You talked about how do you make your brand, how can it be more appealable to the youth. But more from a business environment point of view, because we've undertaken GST, can you give us a sense of what the impact has been? I know it's not, it may not be your core area, but something, what has your team here in India told you?
Yeah. You know, the GST, we were at first, when it was first announced, not sure how to react. However, I would say that it's been overwhelmingly positive. You know, it's simplified a lot of very complicated rules that used to exist. And I think also, you know, for a company that operates, you know, I'd say formally like, you know, we have always done, it's actually favorable because it regularizes a lot of things. So, you know, for us, it's been generally, you know, we started off nervous, but in the end, we're very happy with the way it's gone.
It's gone. Thomas, Archer Bata, absolute pleasure. Thank you very much for your time.
Pleasure being with you.
Appreciate it.